from Press Secretary Karine Jean-Pierre, as well as Ashish Jha just now. All right, we're going to work to get Joe Matthew and his response there. But Carol, my initial reaction is, you know, the president right now experiencing exactly what millions of Americans have already experienced thus far, who are vaccinated, who are boosted, right?
Right.
They can't go and do anything. They have to work from home. They have to be on Zoom calls.
Right, exactly. And it's a reminder of, there's a great story in the Bloomberg that just talks about as the president gets COVID, it's just a reminder that the pandemic has staying power. We are not over the pandemic. We often say, oh, we're on the other side of the pandemic. Well, we know that that's not the case, right? That we continue to see cases. I got it. Your wife got it. Like all of a sudden, we're seeing cases all around us.
It's just incredibly disruptive.
Yeah, absolutely. And it does take you out. And, you know, there are, though, very different if you go back to where we were at the beginning of the pandemic, or as we worked our way through, waiting for a vaccine, waiting to figure out how could we treat this, keeping people out of the hospital. The big difference, and we heard Dr. Jha and certainly the White House press secretary talk about this, that Paxlovid, I took it like it's something that can keep you out of the hospitals. And that's a big difference from what we saw in the really dark days early on of the pandemic.
We should note some additional headlines that we're getting. President's test is being sequenced to determine which variant of COVID he's been infected with. So we'll know if it was BA4 or BA5.
Yeah, absolutely. And so that is something that we'll get some more information on it, and something we'll look forward to it. Meantime, we see markets bouncing around. We're definitely off our lows of the session. And so we are definitely seeing a little bit more risk-on optimism. We heard Kriti Gupta talk earlier about how breadth, we're seeing more markets and are more names within the market, individual names actually, you know, hitting highs. So we're seeing breadth certainly on the upside take over in the market. Right now, slight gains on the S&P and the NASDAQ Dow, though, just off a hair. We're going to check in with our TV colleagues, talk about the market, some of the key factors you need to be watching on this Thursday, July 21st. You are listening and watching Bloomberg.
to the Close, Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. We have just 60 minutes left in the trading session. Caroline Hyde, Shanali Basak, Kriti Gupta in for Taylor Riggs, and we are joined now by our colleagues Carol Masser and Tim Stenovic. We welcome, as we do day in, day out, TV, radio, YouTube, to look at a market that wants to push higher on the equity front.
Yeah, absolutely. And what's interesting is, right, we're off our lows of the session among those major equity averages. But you take a look at something like airline stocks, they are having a tough day. Down overall as a group, if you take a look, they're down about 4.5%. But look at something like a United and American down 10% or 8%. Both United and American coming out and saying there's some tough days ahead, both saying it was limiting flying for the rest of the year. And we're talking about disruption, labor shortages, air traffic control issues, higher cost, Tim. It's not easy being a carrier right now.
Not easy being a passenger either. I don't know if you guys have flown recently, but I think it's fair to say that. Hey, you know what else is under pressure today is the telecom companies. This is the S&P 500 Telecom Services Index. There are only 4 stocks in here, but they're all lower: Verizon, T-Mobile, AT&T, and Lumen Technologies. It's having its worst day in more than 2 years. AT&T, again, dragging the sector down after saying this morning that some customers are starting to put off paying their phone bills. As a result, we saw Verizon move lower, T-Mobile move lower. And look, I think this is a bigger question about the economy. Is this some sort of canary in the coal mine when it comes to the way that people are prioritizing their spending?
And is that what perhaps the bond market is taking its cues from today? Is that why we see a flight to havens? Is that why we see some perhaps more bad news being good news, that the Fed won't go so far so fast? We're therefore seeing the S&P 500 actually managing to tread water, up 0.5%, 21 points higher. The Dow Jones just breaking into the green, but we're basically flat, up just 16 points on a 31,890 index. We're looking at the Nasdaq up 114 points. That's the leader, up almost a percentage point. But the Russell 2000 maybe speaking to that economic concern, the jobless claims and the like. We're down 0.4% on the small caps.
Let's talk a little bit more about what's scraping the S&P into the green, because you have a few stock sectors that are up. It's consumer discretionary up 1.9% nearly. Healthcare on the back of that nice little deal we saw with Amazon as well, 1.2% higher. Infotech also higher. Energy down 2.8% on the day. Of course, we know that's the year's leader. Communication services down 0.5%.
Well, let's talk about those individual movers here, because I think the airlines, and Carol really kicked it off here, is we're getting a lot of attention. I mean, we talk about the pain that we're talking about on the labor front, on the cargo front, but also when it comes to flight capacity, it looks like just to keep up with costs, United, American, well, they're saying they're going to cut back. American in particular, flight capacity dropping by 10%. That is not good news for the passenger or anyone really who wants to take a flight anywhere or even ship things. Remember, some of these airlines are also still dealing with cargo shipments. So United and American both taking it on the chin here. United a little bit more down, about 10.4%. But there is some upside news. That outperformance you're seeing in the Nasdaq is crucial here. Tesla, of course, their blowout earnings. The idea that a 50% annual growth rate is still in play. I mean, that is enormous. Those shares really thriving. They're up 10%. And Amazon's up 1.3% after that deal news, entering into the healthcare space.
And I like that you focused on Tesla there, Kriti, because I want to go in on basically the market's response to earnings, because at the moment, this is the best start of earnings season, best first week of earnings season since 2009. Now, then there is nuance. We started deciding that JP Morgan was the start of earnings, not Alcoa, at some point through the year 2000s up to now. But still, we're up 4.2%. That ain't so bad. How much bad news had already been priced in, Carol?
Yeah, that's a really good point. You know, inflation front and center, right? It certainly kind of guides the market and expectations of what we see from central banks. But it's interesting, too, what leaders have to say about the inflation picture. And our David Weston caught up with the head CEO, chairman of Bank of America earlier on Bloomberg TV and Bloomberg Radio. We're talking about Brian Moynihan. Here's what he said about inflation kind of hitting a top.
I don't think it's peaked yet, and our economists would say it's peaking. Probably is our team. Our team basically says that the Fed will continue to raise rates, and actually, Candace Browning-Platin's team, the research team at Bank of America, has the year-end recession, which they made a call on a few weeks ago. But it's a slight recession, and a recession is not accompanied by high unemployment, which means it ought to right itself and come back out. But it's more the impact of the Fed raising rates and slowing economy. So it's peaking is probably more appropriate than peak.
And of course, that's Brian Moynihan, the chairman and CEO of Bank of America, talking earlier with David Weston. I mean, this is all about, what we are trying to get an idea of when we start to bottom out. I do think we talked about those weekly jobless earlier, Tim, and maybe that is a sign of the labor market starting to come undone. And we do think about the wage pressures that we have seen and how that has factored into inflation.
Yeah, just look at what's happening across different industries. It's not just anecdotal evidence of people being laid off, but we're starting to see the numbers, of course, too, with the pause in hiring at Google's Alphabet and, of course, the Ford layoffs yesterday. I want to go back to what Moynihan was saying, though, the idea of inflation peaking, using the gerund there, essentially saying, okay, well, it may not have peaked yet, but it could be peaking right now. How long are we peaking? That's the question. And, do we come down the same way we went up very quickly or seemingly very quickly? Like, how long are we going to be at, over 9%, over 8%, over 7%? Because I think that's a big part of the question.
I think also what level of interest rate starts to get you there. On one hand, there are things that are out of the Fed's control when it comes to inflationary forces, but you have such a huge divergence on Wall Street. You have the banks that are saying maybe 3.5% is the terminal rate, and then you have Blackstone's economists saying that we can get to 5%. So how long is it going to take, Tim? In the conversation I had with the Blackstone COO earlier today, he thinks that rates at the very least are going to be much higher than people expect for longer than people expect, to your point on how long this lasts for.
Well, speaking of how long this lasts for, let's talk about what's actually priced into the markets, because we had an ECB decision, a historic one here, 50 basis points on the table, which no one really thought was going to happen. It was a complete coin toss, but then you bring it back here to the Fed. 75 basis points is priced into the market. It feels like assets, cross-asset, are prepared for something like this.
Yeah, and when you see the readings of inflation like we did in the UK of a 9 handle and potentially going up to 11, when we see the inflationary pressure, which at the moment is dialing back a little bit in commodities. We've got to look at the sudden pullback in oil on the day. We've got to look at suddenly the concerns with COVID over in China on a day where we, of course, learned the US president has COVID and tested positive. And indeed, you do still have these worries about, well, maybe the slowdown in demand is enough to cool some of what has been the key inflationary pressures across the board, that being energy, that being food.
All right, I'm going to lighten it up because it's feeling pretty heavy right now. But I don't know if you guys saw this story by Paulina Cachero. It's not you, it's inflation. Soaring costs jolting the dating game. So basically, if you're going on a date, you're taking somebody out for dinner, it's really expensive because food costs a lot.
So you're saying it's okay to split the bill these days?
Yeah, totally. Always okay to split.
That's what I'm wondering.
No, but it's real. And I think it is, we talk about this, whether we hit a recession or inflation, like how long does it take for these things to come down? If we go into recession, how deep is it and how long it lasts? I mean, these are things that we just don't know quite yet, but we keep looking for some indications. All right, guys, we've got lots more to come. We'll be back in less than an hour's time. Our cross-platform coverage Beyond the Bell on radio, TV, and YouTube. We will be counting you down to the close on this Thursday.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week, watching us on YouTube. Carol Massar along with Tim Stenovic. I mean, lots of
I love
ifs and
that
buts.
story.
Which one? Isn't it great?
Yeah, I hadn't seen that yet, Carol.
It says daters are experiencing the sticker shock of whining and dining a romantic interest with inflation at its highest rate in over 40 years. And they just talk about food. And they said those searching for love say they're feeling the pain. Among 3,000 users on the popular dating app Hinge, almost 41% said they were more concerned with the cost of dates now versus a year ago, with Gen Z respondents more likely to
How
feel
about
the
just
pressure.
a walk on the High Line?
See, it was so much easier when there was COVID, right? You just did a virtual date.
Yeah, or you went outside in the park, right?
You said we'll meet in months.
it's too hot in many parts of the world right now to actually sit outside to enjoy a drink or eat. I walked by a restaurant in my neighborhood that usually is just packed outside. Not one person was sitting outside. I thought the restaurant was closed. I looked inside. Everybody was in there because the air conditioning was blasting.
I mean, don't you think about it when retailers, like, you walk the streets of New York and they leave their door open a little bit and you're like,
It's
as
illegal.
you walk, is it?
Yes.
Oh, I didn't know that. But sometimes you do it and you feel it and you're like, I'm going in.
I walked by a certain large retailer this morning and had a relief of cold air come out, and I was like, I might hang out here for just a couple of minutes on my way to the subway.
I want to go back to the jobs data, because the unemployment jobless claims that we got here this morning, as we always get on Thursday, and our Markets Live blog saying growing signs of trouble in the jobs market and how that will curb the Fed's tightening path and keep a lid on long-term Treasury yields. Ford Motor cutting as many as 8,000 jobs, Microsoft eliminating many job openings, Google slowing the pace of hiring, Lyft shutting a division. The U.S. is seen adding 250,000 positions in the next monthly employment report, August 5th. It would be the smallest increase since the end of 2020.
Okay, so back to those 2020 comps. Carol, I go back to Michael McKee, International Economics and Policy Correspondent. He joined us earlier. This is what the Fed wants. the economy's slowing.
Right, wage inflation. It's coming down, those wage pressures, but we'll keep an eye and see if the trend line is there.
Let's get to world and national news. Nancy Lyons is in Washington, D.C. Hey, Nance.
Thanks, Tim. President Biden is isolating after getting a positive COVID diagnosis. White House coronavirus coordinator Dr. Ashish Jha says the president is experiencing mild symptoms like a runny nose and dry cough.
In terms of my conversation with the president, he sounded great. I asked him, Mr. President, how are you feeling? He said, I'm feeling fine.
Dr. Jha says the president's risk of serious infection is low, considering he's received 2 vaccinations and 2 boosters. And Biden has also received the antiviral drug Paxlovid, which reduces the virus's impact. Well, the House has passed a bill to protect access to contraception nationwide. Bloomberg's Irv Chapman with the story.
This will be a hearing. The committee feels that he was derelict of duty on.
In the bees. Now they want to turn back the clock. Democratic women in Congress are saying, we're not turning back.
Republicans, including Beth Van Duyne, referred to the morning after pill.
This bill is not about contraceptives. This bill is about funding unlimited access to abortion pills.
The yeas are 228. The nays are 195.
Only 8 Republicans voted for the bill, a fraction of their support for same-sex marriage. In Washington, Irv Chapman, Bloomberg Radio.
Well, American investigators say they found what might be a priceless Fabergé egg on a super yacht that was seized from a Russian oligarch. If the jeweled egg found on board turns out to be genuine, it would be one of the few remaining in the world and worth millions. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. In just a moment, we're going to get to one of the most read stories on the Bloomberg. It has to do with a big tech player. We're talking about Amazon and doing a big deal. In the meantime, among the big tech space, Facebook story caught our attention as well.
All right, I'm not shocked by this, but our own Kurt Wagner and Alex Branca writing that Facebook parent Meta Platforms is changing the way that it shows users posts and videos on its flagship social network. This all part of an effort to get people to watch content from accounts that they don't already follow and better compete with the video app TikTok. I mean, I don't know if you're not a big Instagram person, Carol, right?
No, I like it, but I always feel like I'm just going to get stuck there and never do anything for like an hour.
Well, that's what happens now with Instagram copying TikTok. I mean, you go to Instagram and like a lot of the stuff that I see on Instagram as I scroll through my feed, it's not even people I follow. It's like, here are some other people to follow because you've interacted with this video in the past. And the whole idea there is to replicate TikTok's genius, which is its algorithm, to get you to serve you videos and like quick snippets that you just find so interesting that you'll stay in the platform.
So kick up the velocity, you
Facebook's
stay there
doing the same
longer,
thing.
and then anything in terms of ad content, right? It's worth a lot more.
Yep.
All right, so the main feed on Facebook will now be called Home, and it will be a place for people to, quote, discover new content, as Tim mentioned, that Facebook thinks that they will like. This is according to a company blog post that includes photos and videos selected by software algorithms, which will surface content based on users' interests from both accounts they follow and those they don't. So basically, they take a look, what are you interested, what might you be interested in, and then we're going to throw it at you.
Yeah, it's all about creators here. This is about content creators. And if you think about the way that we've started interacting differently with the platforms, I mean, people aren't posting the same way that they used to when it comes to these platforms. I mean, it's like a joke with people my age using Facebook. Like, we just don't use it as a platform.
Right. But I feel like we see that on Twitter, too. Like, all of a sudden stuff comes up on my feed. I'm like, I don't follow these people.
Exactly. But you follow subjects, right? Like, I see a lot of cycling content there because I follow a lot of cyclists. So they serve me content from people tweeting about cycling.
Well, this has to do with Facebook's demos, right?
Yeah.
I'm trying to kick it up. All right. Hey, listen, coming up, one of our most read stories, Amazon doing a big deal in the healthcare space. We'll talk about the implications, what you need to know about it. Our own Brad Stone joining us in just a moment.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are higher, 43 minutes to go ahead of the closing bell. NASDAQ, the outperformer. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in the green with, like you said, technology leading the way. Dow's currently up 30 points. S&P's gained 23, while the NASDAQ is higher by 1%. The U.S. 10-year yield at 2.92%. Gold is up 18. Oil is under pressure. And Bitcoin trading lower by 1%. Among the main 11 S&P sectors, only energy and telecom were in the red. And leaders to the upside in the Dow, Apple, Boeing, and Goldman Sachs, while Verizon fell 3.4% and led to the downside. After earnings, Tesla rose 10%, while AT&T fell 8%. And in deal news, Amazon to buy One Medical for $3.49 billion in an all-cash deal. In other news, Altice USA spiked intraday on a report they are set to explore a $20 billion sale of Suddenlink. And wrapping things up, Intuitive Surgical and Capital One report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you, Bill. And to hear live breaking news over your Bloomberg, type Squawk, SQUAWK on your terminal. And that's Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. And of course, Bill Maloney mentioning this. And this is I got to say, a story when it crossed the Bloomberg. Tim and I were like, yes, we have to do it. We know who we want to do it with.
We want Brad Stone to join us. He is Senior Executive Editor of Global Tech here at Bloomberg News. He's the author of Amazon Unbound, Jeff Bezos and the Invention of a Global Empire. Also his earlier book on Amazon as well. Brad, good to have you with us. Okay, so we just heard from Bill Maloney about the stock reaction of One Medical, up about 70% right now in the wake of that deal being announced earlier today. My big question for you is my doctor going to know how much ice cream I'm ordering from Whole Foods? Because I do go to One Medical.
Right, Tim. Well, thanks. It's a good question. I think, there are all sorts of HIPAA regulations here, and Amazon needs to be careful. Obviously.
Okay, good. So secret's safe.
Yeah, I think so. But look, Amazon's been signaling its ambitions in healthcare for a very long time with PillPack in 2019, in 2020 when it started introducing devices like those Halo wristbands to help people monitor their activity and sleep, and then less visibly, Andy Jassy in the private Amazon all hands meetings always cites healthcare as a major avenue for growth, and he's been looking for that fourth pillar alongside Prime, AWS, and Marketplace, and I think he believes that healthcare is it.
What's the margins in healthcare overall, and maybe the space that Amazon really wants to be in, Brad?
Right. Well, Carol, my healthcare expertise consists of me going to the doctor, but I will say that One Medical, of which I was a member actually during the pandemic, it's a very useful virtual service, a great kind of customer-facing technology stack, clinics in, I think, 18 states, but there are a bunch where I live in the San Francisco Bay Area, but it has been an unprofitable business. And, Tim, you mentioned the $18 per share buying price, and the stock is way up on the news. But this was a business that was losing money. It's never made a profit, and the stock was trading around $10, well below the IPO price when it went public in 2020. So the business has struggled, but Amazon's comfortable in these very low margin businesses. So they obviously think that there are some synergies on the back end with AWS and what they're already doing with their healthcare initiatives, where they can get this to profitability.
Does it turn into something like of a concern, the way that Whole Foods has kind of been a concern for Amazon, in the sense, Brad, that they didn't necessarily revolutionize the Whole Foods experience? It's something that you do touch on in your most recent book, because this is the biggest acquisition that Amazon ever made. The one that we're talking about today is the third largest after Whole Foods and MGM.
I think that might play to Amazon's benefit here, because when it bought Whole Foods in 2017, like, the stock prices of other grocery chains cratered. There was a serious antitrust review, and as you say, Tim, they haven't probably crushed that acquisition. The integration hasn't been as deep as some people expected. I think in a different environment, this deal might get a different look. I think it's probably likely to sail through. So, integrating these businesses is a challenge. Amazon probably needs to do better with Whole Foods. It integrated the robot, the warehouse robot business, Kiva, very well. Its record is a bit checked, so we'll have to see how they do on this one.
What do you make of, I think it's been, Brad, an interesting week. We had the story by Mark Gurman about Apple and their almost 60-page report and how they're kind of all in on healthcare, and then you've got Amazon continuing to, wade deeper and deeper. It feels like, although I think our reporting said that this wasn't essentially a transformative deal for Amazon, but it does feel like big tech increasingly looking at healthcare, making moves there.
Well, look, these companies are giant. There are many fewer buckets of large potential growth opportunity. The global healthcare market is trillions of dollars. It's also an industry that frankly needs a little bit more technological disruption. The fact that, it can be hard to book an appointment online with your primary care physician. The fact that it's difficult to go to make a follow-up appointment, or to even, the fact that prescriptions are sent manually to drugstores. There's opportunity there. There's also a lot of regulation and kind of institutional bureaucracy that sort of prevents this market from changing very quickly.
What would you imagine executives at Apple are thinking right now with this kind of move? Because as Carol mentioned, everybody in Silicon Valley wants in on healthcare. It's a fifth of our economy.
I think that probably the larger source of awkwardness is with Alphabet. Alphabet uses One Medical to extend an extra healthcare benefit to its employees. There are plenty of companies now that are in that classic awkward situation of relying on a company that is now owned by a primary adversary. Apple. Look, Apple always innovates purely on the consumer side, often with devices. Right. I don't see this as a potential move Apple might make, but certainly it's one that Google's probably thinking about.
Awkward.
Yeah, you thought AWS was awkward, right? Getting everyone off AWS if you're competing with Amazon.
Oh my God! Hey, listen, 30 seconds. Should we be watching anybody else in terms of the big tech space? That might make a move here.
Well, I think this is probably more likely getting the folks like kind of CVS thinking about what is their route to the customer, what is their route into this primary care market, and then Amazon. There are still pieces that they miss. Do they want to buy a health insurance company like CVS did with Aetna? Those are now the strategic moves to weigh.
Thank you. Brad Stone, Senior Executive Editor of Global Technology at Bloomberg News, author of several books, everything when it comes to Amazon, the Everything Store, and of course, the latest Amazon Unbound, Jeff Bezos and the Invention of a Global Empire. Thanks, of course, to Brad joining us from our San Francisco bureau. You are listening to Bloomberg Business Week, watching us on YouTube. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, so you brought up this really good point. You make something in one plant in Pennsylvania, and then you ship it to Europe for slicing?
Yeah, you got to slice it somewhere.
But can't you do it closer to home?
I don't know. That's a question we're going to pose to
Talk
Dina
about
Shanker.
like high fly and pepperoni.
Yeah, we're talking about Beyond Meat's pepperoni product, which Dina Shanker writes about. We're going to catch up with her in just a minute. First up, though, we go to Charlie Pellet. Charlie, we got less than a half hour to go.
Indeed, we've got stocks higher across the board. Best level right now on the S&P, advancing by 28 points. We're looking at a gain of 0.7% on the S&P 500 index. Dow Jones Industrial Average is also advancing right now. We have got the Dow up by 71 points, a gain there of just about 0.2%, while the NASDAQ Composite Index is up now by 1.1%. That is higher by 133 points. 10-year yield 2.89%, spot gold up 1.3%, 17.17 the ounce, and West Texas Intermediate crude down 3.7%. That is a drop right now for WTI, lower by 3.68 a barrel to 96.20. Stocks are higher as investors assess the latest earnings reports and prospects for growth after the European Central Bank joined global peers in tightening policy. The ECB raising its key interest rate by 50 basis points, the first increase in 11 years, and the biggest since 2000 as it confronts surging inflation, even as recession risks mount. Today's rate hike comes amid a political crisis in Italy, with Mario Draghi resigning as the country's prime minister. Esti Dweck is chief investment officer at Flowbank.
This is more, I think, a way of saying, don't test us, don't push the boundaries on Italy, because we will react. And if it isn't the TPI, it's one of the other acronyms that they still have available. And between all of those, they will continue to contain spreads and ensure this transmission mechanism.
Tesla has been going through what it calls supply chain hell, but Elon Musk believes the electric car maker stands a chance of emerging from it in the second half of the year. Tesla shares surging today by 9.9% after last night's earnings report. And if we're talking Elon Musk and Tesla, cannot ignore Twitter. Twitter shares down now by 0.4%. Again, recapping, we do have stocks moving higher with the S&P up 25, now up 0.7. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie. Well, Houston, we have a problem. Well, maybe not. Maybe more like Beyond Meat, we have a problem.
We do. We can't get the plant-based pepperoni to just,
What's up with that?
Well, we're going to ask Dina Shanker all about it. She writes about it for Bloomberg News. She's a consumer reporter here, and she joins us on the phone from New York City. All right, Dina, what is the problem with Beyond Meat's pepperoni?
Hi, thank you so much for having me. And I think the better way to ask that question is, what isn't the problem with the pepperoni?
Good point. What isn't the problem with Beyond Meat's pepperoni? We'll try this again.
So basically, they announced, Beyond and Yum Brands announced a big partnership in February 2021. They were going to put plant-based meat alternatives on menus at KFC, Pizza Hut, and Taco Bell. Now we're just about a year and a half after that announcement, and we don't have a permanent menu item on a single U.S. menu at any of those restaurants. The pepperoni has been sort of emblematic of the challenges that Beyond is having. None of this seems to be stemming from a lack of enthusiasm from Yum, but rather that Beyond simply cannot make product. They have just a lot of challenges with turning it into something real and sellable.
Is it just stuck on a plane between Pennsylvania and Europe, flying back and forth, waiting to be cut?
Watching movies
what is going
with
on
a
here?
blanket wrapped around.
Carol and I read this, and we were both like, what? Why can't they cut this pepperoni in Pennsylvania?
That's a really good question. What the company told us is that the machine that they needed to slice the pepperoni was in Europe, and it made more sense just to bring the pepperoni to Europe for slicing. But, the expert that we spoke to here, who's a veteran food executive who worked with Tyson, Walmart, fast food companies, and he was like, you can find that machinery in the United States. Why would you bring it to Europe?
I mean, This is staggering. I just think go back a few years, right? Beyond Meat, and they were just hooking up with everybody, and everybody was like all in on it. I mean, this was a stock back in July of 2019 that was above $234 a share. It's at 38 and change as we speak. How crucial is figuring out the pepperoni story and getting it right to really the growth story at Beyond?
You know, I think that this company had so much excitement and momentum behind it, and living up to that hype was going to be really difficult. But maybe they didn't, inside the company, internalize how much work it would take to really supply a company like Yum, and what it means to make a menu item for Pizza Hut. And we've seen this kind of problem with the rollout of their chicken product, which came really late compared to competitors. They have been, they told us in the last earnings that their jerky product that they did with Pepsi also had a lot of issues in terms of production. A hallmark of the Beyond Meat production is that they make their products in multiple plants that are situated in different places around the country. And in the case of pepperoni, it was actually different continents. So they just really haven't gotten their commercialization into the place it should be when they're working with partners that are this big.
How does it taste? Do we know how it tastes? Do you know how it tastes?
I couldn't tell you because it was only in under 70 Pizza Huts, and none of them were near me. The reason I actually started talking to so many people about the pepperoni was because I wanted to try it. And so I was waiting for there to be another test and for it to show up again, and it just never showed up. So I kept asking people, what's going on with the pepperoni? And when I talked to these former employees, it was like I just kept getting crazier and crazier stories about the problems that they were having.
Well, investors aren't so keen on Beyond Meat, as we said. Stock's down 41% this year. Almost 42% of the outstanding shares of the float is being shorted as we speak. So that's a pretty negative tone. Hey, Dina, just got about 30 seconds left here. So is it just pepperoni's tricky? Is it that technically it's just tough to do, or is it that management, maybe they need somebody else in charge of the pepperoni and figuring it out just quickly?
Well, that's definitely something that I've been hearing when I talk to analysts and other people in the industry. Actually, they wonder how long does Ethan Brown have, and why hasn't he given over more control to his COO, his chief operating officer, who came in from Tyson, who was really supposed to right the ship, but that hasn't happened yet. So I don't know. We have to wait and see what the company decides to do about its leadership.
Yeah, pretty fascinating. What
Check out this article online because there's a pepperoni in a plane GIF that is just awesome. And it's a great article too, Dina. So thanks for joining us.
It made my day, a little pepperoni in the driver's seat of the plane. All right, Dina Shankar, consumer reporter at Bloomberg News.
Let's go to Washington, D.C. now for a check the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. President Biden says in a Twitter post he's isolating and working from the White House residence after getting a positive COVID diagnosis.
I'm doing well. I'm getting a lot of work done. I'm going to continue to get it done. And in the meantime, thanks for your concern.
White House Press Secretary Karine Jean-Pierre has also provided an update.
President Biden is currently experiencing mild symptoms, mostly a runny nose and fatigue, with an occasional dry cough.
Karine Jean-Pierre says the president has been fully vaccinated and boosted and has been given the antiviral drug Paxlovid. The illness forced him, though, to cancel a trip to Pennsylvania today to talk about gun control. The House January 6th committee is getting ready for its final primetime hearing of the summer tonight. Bloomberg Government's Jack Fitzpatrick reports it'll be focused on 187 minutes at the White House while the attack at the Capitol was underway.
This will be a hearing very focused on Trump's inaction or some actions and why the committee feels that he was derelict of duty on January 6th and really zeroing in on the primary character they're focused on rather than the peripheral people.
Bloomberg Government's Jack Fitzpatrick. That hearing begins tonight at 8 p.m. Wall Street time. Mario Draghi has resigned as Italy's prime minister, throwing the country into turmoil and putting it on a course for snap elections as soon as early October. His government will continue in a caretaker role to handle ongoing business, but its influence will be minimal. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much, Nancy Lyons in our D.C. newsroom, 99.1 newsroom in Washington, D.C. So this story is among the most read on the Bloomberg in the past 8 hours. Has to do with the Greenwich, Connecticut housing market that may have experienced the last gasps of its pandemic frenzy in the second quarter as record-setting sales prices, Tim, are giving way to some signs of a slowdown. We keep looking for signs, anecdotes, data points of things maybe coming down.
Put this one in the bucket of data. This is not just anecdote, right?
Yeah.
Single-family home purchases closed at a median of $2.5 million, topping the previous record set just a quarter before by 2%. This is according to appraiser Miller Samuel and brokerage Douglas Elliman Real Estate. About 45% of sales in the posh Connecticut suburb came after a bidding war, the largest share since the firms began tracking the metric 5 years ago. Carol's successful buyers paid an average of 7.4% more than the listing price.
I love this quote from Jonathan Miller, President Miller Samuel. He says, Greenwich is returning to earth. The intensity is not what it was. So in all, 193 single-family sales closing during the quarter, down 40% from the frenzied market of just a year earlier. The number of homes entering contract, some of which will not make it to closing, so we need to point that out, declined during each successive month of the quarter, to 63 in June, so it's half of the June 2021 level. Forgive me, there's a lot of data points there, but basically it's just saying things are slowing down.
Okay, so what should we be looking for? Well, a lack of inventory in Greenwich may help continue to prop up prices. Inventory there has hovered near record lows for months. There are 214 single-family homes on the market at the end of the second quarter. That's down 70% from the 724 that were available in the same period of 2019. That, Carol, was before the pandemic.
Here's what's interesting. Prices are roughly 23% higher than in the second quarter of 2019 when the median was a little bit more than $2 million. Miller doesn't anticipate the market getting much cheaper in the near term, and that's because he says inventory was obliterated. Pricing still has a pretty firm underpinning despite the slowdown in activity, so price is still holding up there.
Don't forget to look at taxes, too.
Oh, yeah.
Those are going to be expensive
People
in
pay
Greenwich.
taxes? Oh, yeah, we certainly do here in the United States. All right, you are listening and watching Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are seeing buying into the close. 13 minutes to go until we get that closing bell with the Dow, the S&P, and NASDAQ all advancing. S&P right now, best level of the day, up 30. A gain there of about 0.8%. The Dow's up 83 points now, higher by 0.3%. NASDAQ is up 130, higher now by 1.1%. So the S&P poised for a third day of gains, led by technology and consumer discretionary stocks. Stocks are higher as investors assess the latest earnings reports, along with prospects for growth after the European Central Bank joined global peers in tightening policy. Right now, the S&P, as I mentioned, up 0.7. We've got the 10-year yielding 2.90%, the 2-year 3.09%, spot gold up 1.3%, $17.17 the ounce, while West Texas Intermediate crude oil is down 3.5%, $96.38 right now for a barrel of WTI. After earnings, Tesla rallying 9.9%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. Democrats and Republicans alike should be able to agree on a simple principle. Immigrants who come to the U.S. legally ought to be given a fair chance to build lives in the country. It's perplexing, then, that the government is denying this opportunity to thousands of young immigrants whose parents came to the U.S. legally for work, but who have not yet been granted legal permanent residency. Those young people now risk being forced to leave the only country many have ever known. Fortunately, a bipartisan measure passed in the House last week would help fix this problem. The Senate should pass its own version quickly. America's long-term growth prospects require the country to bring in knowledge workers from abroad. Ensuring those workers' children can build lives in the U.S. is critical to winning the global war for talent. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, let's get to it, everybody. Just about 10.5 minutes left of today's trading session, and we are pretty much at our best levels of the session. Yep, we are when it comes to the equity trade here. Charlie breaking down the numbers, and really tech outperformance once again with the NASDAQ up 1.25%.
Let's get into it with Marcy McGregor. She's a senior investment strategist and a managing director, chief investment office of Merrill and Bank of America Private Bank. Marcy, good to have you with us. How are you?
I'm great. Thanks for having me back.
Well, thanks for joining us. I want to get an idea of really how you're looking at the market, because earlier this week we had this back and forth whether or not we've reached capitulation. Bank of America was saying one thing. We saw Bernstein yesterday come out and say another thing. Where do you fall personally?
Yeah, there's so many cross currents right now. I think in the very near term, we're seeing this relief rally within a bear market. For that reason, sentiment is so bearish, and cash positions are really high. We've seen institutional investors already reposition and get quite defensive. So I think we're seeing a little bit of relief from the markets that we've seen recently. But in the bigger picture, I think really what the market needs is evidence that inflation has peaked. And ultimately, I think we need to get through this period, which I think is going to be an earnings reset where expectations get reset lower. And that's where I think markets can actually get set in a more meaningfully positive direction for the longer term.
So, Marcy, what I wonder is, what are the meetings you guys are having in your offices when it says to, all right, folks, we're watching the data points. we need to think about, markets looking ahead to kind of what's next, not what is. So I'm just wondering, the calculus of when you think that might be and when you might position or think about positioning for maybe a much more certainty when it comes to economic growth.
Yeah, we're all looking for that certainty. So most recently, we've actually lowered risk on behalf of our clients in our portfolios because we do think this volatility is going to continue. I think it's a time to tilt towards higher quality investments, to kind of muddle through this period. When I look ahead, unfortunately, this earnings reset isn't going to be like a Band-Aid getting ripped off. I think it's going to take some time, possibly over the coming months. We've already seen economic growth really moderating. The market's clearly looking way ahead. So I think, unfortunately, we're probably in for this choppiness over the next few months.
Right.
The earnings reset is the real milestone I'm looking for.
You keep saying earnings reset, but I do wonder about if I look at the year already, we're already halfway through. I mean, first quarter was a bummer in a big way in so many different asset classes. Over the past month, we've seen, Kriti Gupta talked about it earlier, of more stocks hitting, I think it was 50-week highs. So there's much more breadth in the market. And if you look at those major industry groups in the S&P 500, most of them are higher for the last month overall. So we've seen a rotation, a rethink among investors. You think that's just kind of a mind fake, if you will, or a head fake?
I think it's just a little bit of a relief rally right now. And without a doubt, market breadth has improved. And I like what I'm seeing in some of these market internals. Seasonality of July is on our side right now as investors. But we haven't seen consensus estimates for earnings, especially for 2023, come down. I still think they're too optimistic. We're not looking for a huge decline in earnings. I actually think it'll be much milder than we've seen in past recessions or even in past recessionary-like periods. But what we're seeing as an early indicator is earnings revision ratios are just starting to deteriorate. The U.S. among global regions is now the lowest ratio in the world, and we have 2 downgrades for every upgrade right now on U.S. equities. So I think there's a little bit more to this story to go.
In comparison to like Europe or something? Does that make sense to you?
I thought that the ratio, it had been above 1 for Europe and Japan, which struck me as a little strange. I totally agree, because I actually think macro-wise, Europe is the weakest link in the global economy, of course, given their energy crisis and the slowdown in growth they're facing there. So it is a bit surprising, but I think earnings revisions are a good kind of early indicator about when it's time to get more positive. I just don't think we've seen a trough yet.
Okay, well, let's shift the conversation and talk a little bit about where you're looking for areas of growth and where you're bullish. I know you're overweight on energy, financials, healthcare, real estate, and utilities. I want to start with energy. Given that we've seen a little bit of a pullback within oil prices lately, why do you think energy still has room to run higher?
Yeah, so I think energy, I'm actually viewing this pullback as a healthy sign for this sector. Energy and banks are the only 2 regions that are seeing upward revisions. And big picture, there's no quick fix for the structural supply-demand issues that are taking place globally in the energy markets. And in light of course, the geopolitics in Europe, I think North American energy is going to be part of the long-term solution. Also, if you look back at the 1970s, the last kind of inflationary period we saw of significance, energy as a sector doubled in market cap. So I like energy for exposure, even though it's had a little bit of a reset recently.
Even though we know that longer term, we're going to have to shift from traditional energy, fossil fuel, to alternative, you're saying that there's still more room to run for traditional?
I think that that's the difference of time horizon, right? I think of traditional energy for the next year or 2, but undoubtedly, if we look out a decade from now, it's going to be all about a greener, cleaner world. But that's the difference in time horizon for us as investors.
You like real estate. I'm kind of confused about home builders. They're up about 2.7% today, despite D.R. Horton cutting its home sales forecast, a slowdown hitting builders. We see mortgage rates spiking. What kind of real estate do you like?
So I think there's this tug of war going on right now in the housing market, for example. Obviously, affordability has become really challenged, but we estimate there's a deficit of homes in the U.S. by 3 to 4 million homes because home building has lagged so much since the global financial crisis. So I think that tug of war is going to play out. I like the broad sector, though, for inflation positioning, right? We don't think inflation is going to turn significantly lower in the immediate future. So that's how I like to position our clients for higher inflation that's here to stay for a bit.
All right. Well, covered a lot of ground. Thank you. Great to check in with Marcy McGregor. She is Senior Investment Strategist and Managing Director of the Chief Investment Office of Merrill and Bank of America Private Bank, joining us on the phone in New York City. Just a few minutes left in today's trading session, and we are seeing buying into the close. As for the equity trade, Tim, we are pretty much at our highs of the session. So the NASDAQ up 1.3%, still just about a 0.5% gain on the Dow Jones Industrial Average. And the big caps, the S&P 500, almost higher by 1%. All right, time to head over to our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We are counting you down to the close on this Thursday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We are about 2 minutes away from the end of the trading day. Caroline Hyde, Shanali Bassett, Kriti Gupta in for Taylor Riggs, counting you down to the closing bell right here, right now, to take us beyond that bell. It's a global simulcast. We've got Carol Massa, Tim Stenovic bringing together Bloomberg TV, radio, and YouTube audiences worldwide to pass a day where Tesla has led us higher, but we get breaking news on Tesla as we speak regarding a probe into one of the key lieutenants or lieutenants, whether you're UK or US based, of Tesla. Really internal probe scrutinizing an executive in the office of the CEO, planning to part ways with Afshar, one of the top Musk lieutenants, like aide, helper to one Elon Musk. And we understand the investigation is into a purchase order that has led to certain firings, all regarding glass. Supply chain issues, they get everywhere, Carol.
Yeah, absolutely. And so this certainly plays to one of the bigger, broader stories of the day. But I think about, I'm just taking a look at what's going on in shares of Tesla, and it doesn't seem like investors, at least at this point, are noticing maybe we need some more detail to understand what could be the implications and if there's any kind of material impact financially on the company. Stock's still up about 9.7%, Tim.
Yeah, this has investors weigh that better than expected quarter yesterday, and the commentary, too, from Elon Musk about how the company is faring. Kriti, I want to just let you know we spoke to Marcy McGregor, who said, taking a step back and thinking about the bigger picture here, don't get too excited about this rally that we've been seeing. She thinks it's a relief rally within a bear market. Sentiment is so bearish, and she comes from the Chief Investment Office of Merrill and Bank of America Private Bank.
You know, it's funny, Tim, we were talking about Quincy Crosby about just that. She issued some caution as well, but I have to ask, to what extent is so much bearishness actually a sign of bullishness, Caroline?
Well, yeah, is bad news good news? Are we going higher in the equities because of earnings are looking better than feared, or is it that jobless claims are rolling over somewhat? We have the S&P 500 currently up almost a percentage point. They're ringing in the bells, and 39 points is where we're going to settle out at. 3,999. 4,000, clearly very much a technical level of resistance there. We see the NASDAQ 161 points higher at the moment, 1.4%. Dow Jones is up just 0.5%, 162 points to the higher side. Let's pull out and have a look at what the Russell 2000, what small caps fared like, because they were your underperformer, but even at the end of the day, we suddenly catch some wind. We're up 0.5%. It is a third day of gains on some of these major indexes. But overall, we are going to be looking at what's happening across this breaking news. And of course, we do want to be digging in a little bit about, well, what this market has made of it, Carol.
Yeah, well, I'm scratching my head here. Here we are closing at our highs of the day. I'm just looking at home builders, which were down more than 2% earlier after D.R. Horton cut its home sales forecast. We've got higher mortgage rates. There's a lot of dynamics against the home and housing market, and yet we see investors moving into those home builder stocks up about 2.7% today, guys.
You really train the eye on the home builders. Let's train our eye on that breaking news coming from Tesla. An internal probe scrutinizing, well, an executive in the office of the CEO. The man behind that scoop is one Ed Ludlow. Talk us through it.
Yeah, so according to sources, there was a procurement order generated earlier this year for some glass. And inside of Tesla, legal representatives are looking into where this procurement order generated from. And frankly, what sources tell us is that Omid Afshar is a part of that investigation. The thinking is, although we don't have detail if there is any wrongdoing or not, that he will be put on leave as a part of this investigation. And sources tell us that a part of what the investigators are looking at is whether the glass in question was for personal use by Elon Musk. So it was a PO put through the company, but they're looking at a question. They haven't come to a decision, according to sources, about whether this was for Musk's own personal use in a personal construction project.
Now, Mr. Afshar, you've written, was something of a fixer for Mr. Musk. What's really at stake here for an investigation like this?
Yeah, so I reiterate that this is an internal investigation. It's something that's being looked at by Tesla personnel, but Omid Afshar is essentially Elon Musk's right-hand man. He was kind of the overseer of the construction of the plant in Austin, Texas, and since that construction was completed and it's gone through production, he's also overseen that process as well. And in interviews he's given in the past and is well known within Tesla, he's kind of had a number of jobs. In his earlier days, he worked in the office of the CEO as basically an executive assistant. Then he was kind of promoted to the director of special projects within that group. So he does a lot of work. He kind of has hands in everything. But sources tell us that as part of this investigation into a PO that was suspicious, that Omid Afshar is also being looked at as part of that investigation or consideration, and that, according to sources, they're planning to put him on leave in the coming days or weeks.
Ed, any idea what the glass was used for, if it was indeed for a personal project for Elon Musk? I mean, glass, we think of this in terms of automotive, like obviously used for cars, but in many cases could be used in the construction of a factory, for example.
Yeah, so the factory in Austin has a lot of glass around the outside of it. Tesla also plans to expand the footprint of that factory, right? Make it bigger, build it out. It's a massive plot. All we know so far, and according to sources, is that this procurement order was generated much earlier in the year. It was flagged to Tesla's internal audit and finance group. It was considered to be suspicious, and that those groups carried out the normal function of an internal audit and finance group, and it's now being looked at by legal too.
Ed, I don't want to make, too many assumptions here, but if it was Elon Musk, what of him?
Repeat the question, Caro.
What of him? What of Elon Musk if it's for his personal use?
Yeah, so all I can say is that Bloomberg put requests for comment in to Elon Musk, several Tesla representatives. We haven't heard anything back from Elon Musk or Tesla representatives. But as I say, according to sources, what the investigators are looking at was that this was a PO put through the company, but that ultimately the glass was destined for use in a non-Tesla project, a non-Tesla construction project. And one of the things they're looking at is whether it was to be used in a project linked to Elon Musk personally, whether that's a personal home or other project, we don't know. But those are the facts as we have them from sources.
That's Bloomberg's Ed Ludlow. Thank you so much. And joining us for your scoop, recapping, there is an internal investigation going on inside of Tesla now, and which has led to some firing of employees in relation to the probe. But part of the probe involves the use of glass purchased by Tesla, potentially used by Elon Musk. So a lot of single name stories out there on some of the biggest tech auto companies out there. The question is, what do these headlines mean for the companies themselves?
And for the executives. Meanwhile, of course, Tesla was riding high today on the back of its earnings. Let's get to more earnings right now. Mattel, toy maker, second quarter adjusted earnings per share, 18 cents. Well ahead of the 6.6 estimate, Carol. Net sales, 1.24 billion. Again, it beats. They see full year net sales to be up 8 to 10%, and their gross margin going to actually be on the higher side, 47 to 48% for their full year adjusted gross margin. They'd previously seen about 47%. Capital expenditure going to be $175 to $200 million, basically in line with the expectations. But this is strong coming from Mattel.
Yeah, and you've definitely seen that reflected in the share price this year. It's up about 12% so far in 2022. This is a company that has really figured out its supply chains, its product mix. Aren't they working with Elon Musk? Speaking of Elon Musk, right, in terms of a partnership on toys. I mean, they are very good with partnerships, whether it's for the kid audience or whether it's for the adult audience, and they've been able to really kind of grow top and bottom line as a result, guys.
Yeah, I think that is really crucial what you brought about the supply chains. If you actually talk about their rival, Hasbro, has been very vocal about trying to actually get in front of nearshoring, the idea of bringing some of their supply chains from China over to like the Mexico or Canada, for example. I think that's really crucial that Mattel has the upper hand.
Ynon Kreiz, the company's CEO, he's going to be joining us on Bloomberg Radio tomorrow. He said the first half of the year was an outstanding period of growth for the company. We are benefiting from strong retail partnerships and look forward to meeting the projected increase in consumer demand for our product as we enter the second half of the year and the all-important holiday season. As the owner of one of the strongest portfolios of children's and family entertainment franchises in the world, we are excited by the opportunities to capture the full value of our IP, Shonali.
Yeah, you're seeing Mattel shares now turn negative also. I do want to point out that even though there is some bright spots here, it is still a decrease of 310 basis points in its gross margin. And again, the constant currency also being a bit of a headwind here when you're looking at Mattel. Again, it's going to be a push-pull all earnings season, guys, on whether bad news is as bad as expected or whether they're escaping some of these broader macro issues that are plaguing just about everybody.
Well pointed out. This is, of course, a company that has to navigate inflation, I sort of feel toys are recession-proof to a certain extent because when a kid's asking for something, a kid's asking for something.
It's not Christmas yet.
Yeah. But at the moment, we do see sort of a flurry of companies that, once again, is it just the bad news is baked in some way?
Yeah, and I think what's also interesting, I mean, let's just put some numbers to that cross-currency fluctuation that you two were just talking about. The idea that their revenue would have been 4 percentage points higher if not for those fluctuations. That is an enormous amount for a toy company.
Well, and I think I would go back to the gross margin, right? Coming in just a hair light, but nonetheless, this is something Gina Martin Adams talks about, the ability for companies to maintain their margins. We continue to see more pressures on that. All right, folks, that's going to do it for our cross-platform coverage on radio, TV, and YouTube. We call it Beyond the Bell. We will see you again, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so looking forward to catching up with Ynon Kreiz tomorrow. He always gives us a lot of time and a lot of insight. They have been smart in terms of shifting their supply chains. They have material costs, and we'll ask him about that gross margin. But it's been a pretty dynamic story, I would say, for the last few quarters in terms of getting the right toy mix, meeting demand, growing some of the old brands as well as the new brands. So curious.
I feel like we were just talking to him about the 2021 holiday season. How are we already tomorrow going to be talking to him about 2022? Look, these things need to be on boats already, right?
Exactly. So we'll hear about supply chains, we'll hear about costs, we'll hear about his expectations for demand, like what the consumer is. But I agree with Caroline, like when a kid wants something, you'll give up something else to make sure you can get your kids some toys. Right?
I'm almost there, I think, yeah.
All right, let's get back to world and national news for that. Back to D.C. and Nancy Lyons in our 99.1 newsroom. Hey, Nance.
Thanks, Carol. President Biden has COVID and is remaining isolated at the White House.
The president has a runny nose and occasional dry cough, and he feels a bit tired, Dr. Ashish Jha said after talking to him.
He sounded great. I asked him, Mr. President, how are you feeling? He said, I'm feeling fine. Because the president is fully vaccinated, double boosted, his risk of serious illness is dramatically lower. He's also getting treated with a very powerful antiviral, and that further reduces his risk.
Jha said it will take a few days for a lab test to determine whether it's the latest variant that afflicted the president. In Washington, Irv Chapman, Bloomberg Radio.
Another virus is what has New York health officials worried. They say they're seeing the first U.S. case of polio in nearly a decade. The Rockland County resident is an unvaccinated young adult who developed paralysis. The person is no longer deemed contagious, but investigators are trying to figure out who else might have been exposed. The January 6th committee returns to prime time tonight. Bloomberg's Washington correspondent Joe Matthews says this hearing is focusing on the 3+ hours during the insurrection at the Capitol.
It's about filling in the blanks in what exactly happened inside the West Wing that day in the now infamous 187 minutes that the president waited to ask his supporters to urge them to leave the Capitol. We're going to have testimony from the former Deputy National Security Advisor, Matt Pottinger. We're also going to hear from a former Deputy Press Secretary, Sarah Matthews.
You can hear more from Bloomberg's Joe Matthew at the top of the hour on Bloomberg Sound On. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, folks, this is what you don't want to hear if you're an investor because, and this maybe helps to explain why Snap shares are down about 17, 18% in the after hours. First of all, second quarter revenue was light, 1.11 billion versus 1.14 billion, but says it's not providing third quarter financial guidance.
Look at that, Carol. Yeah, we're seeing shares of Snap right now just crater in the after hours as a result of these numbers. Let's go through some of these numbers here. Second quarter revenue coming in at $1.11 billion. That's light of estimates, 1.14 billion. Shares tumbling 19% after that revenue miss. And like you said, that third quarter forecast, or lack thereof, I should say, that really sending shares lower.
Yeah, I mean, this is when we talk about this going into an earnings season, and particularly when there's one where there's so many questions about market capitulation, recession, no recession. You want some kind of guidance. This is a special story, though. We know this coming in. We've been talking about the ad market for so many companies like Snap and some of its competitors. I will say that the company is authorizing up to $500 million in terms of a stock buyback, but still, stock in the after hours down about 16%. I just wanted to look, about 5% of the float is shorted, but the stock is down 65% so far this year.
We like Snap because we learn what investors think about other companies too. So I'm looking right now at shares of Meta Platforms, the parent company of Facebook. Investors selling that off in the after hours, down 4.3%. Pinterest, Carol, also down by 6.4% after these results from Snap.
Now, is this a special case? Like, how do we think about Snap versus some of the other major
players?
Well,
it's interesting. So Snap said that, last time it really made waves by saying supply chain challenges were an issue, and a lot of people made fun of that because they're like, what supply chain issues does Snap have? But the truth is there are a lot of companies that advertise on Snap that do struggle with supply chain issues. So if those companies are having supply chain issues, they can't spend as much on marketing, then Snap is going to see a pullback on their ad revenue as a result.
Well, and I'm just going to say some of the stories that we had on the Bloomberg ahead of it. I mean, Barron's was saying Snap earnings today, all eyes are on its outlook. Well, we told
no outlook.
The company has no outlook. Stock's now down about 20%. And we did see Deutsche Bank, KeyBank, Snap targets lowered at Deutsche Bank and KeyBank ahead of this result. So they were certainly worried about what was to come.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Snap says it is not providing third quarter financial guidance. Shares are plunging after hours right now. Snap down more than 25%. It reported revenue that missed analyst estimates, citing a major slowdown in the advertising industry that is likely to affect other tech giants again after hours. Snap right now plunging by 26.5%. And by the way, you can add Snap to the list of tech stocks, saying they will be slowing the rate of hiring and the rate of operating expense growth. Mattel also out with earnings after the close of trading. It reported adjusted EPS for the second quarter that did beat the average analyst estimate. Mattel, though, down now by about 1.3%. Stocks had their best three-day rally since May, with the S&P up today by 39 points. The S&P, by the way, just shy of 4,000, 39.98. Up today by 1%. The Dow up 162, up 0.5. NASDAQ is up 161, a gain of 1.4%. 10-year yield 2.88%. Spot gold up 1.4%, 17.19 the ounce. And West Texas Intermediate crude down 3.4%, 96.44 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you for that update. We're going to get more on Snap in just a moment, but we do want to get to a very cool story that is from Bloomberg Business Week. It's also among the most read, and this is our cover story this week.
Chris Feliciano-Arnold is the author of the story. He's a contributor to Bloomberg Business Week. Chris joining us on the phone this afternoon. Chris, how are you?
Great. Thanks for having me.
Well, thanks so much for having us. Love this story because I love all things drones. And I remember, almost 10 years ago, as you're right, when Jeff Bezos was sitting with Charlie Rose the night before Prime Day, or I guess it was Cyber Monday, I should say, when he was unveiling Amazon's delivery drones. And they're not flying by our heads right now. What is the future of drones? What are NASA and the FAA doing right now to revolutionize air traffic control for what could be the drone era?
Yeah, it's interesting that in some respects, this future, we've been hearing about it for a long time. You mentioned almost 10 years now. And in some respects, the future is here. The advances in electric propulsion and battery technology have really made drones really exciting, what they're capable of in terms of their forms and capabilities. And yet, for a variety of reasons, that science fiction-like future we were told hasn't yet arrived. And one thing that I was surprised to find out is that one of the most complex tasks in making that future come to fruition isn't so much the hardware challenges, but more so the air traffic control challenge of managing what's amounting to an exponential increase in air traffic as regulators consider what it means to introduce potentially millions of new drones into the airspace.
I have to say, you want to get freaked out, Chris, you got to check this story, check it out online, because it has that idea of ultimately how many drones, I guess, are going to be up in the air, and just, kind of how crowded our airspace.
The cover is literally a video.
It is,
yeah.
And how crowded our airspace is going to get.
You've got pizza boxes and toilet paper flying at you, Carol.
Hot coffee, perhaps. That really kind of freaks me out. So enter NASA and the FAA. These are two areas of our government and our world that make sure people fly safely and make sure that when we shoot stuff up into space, it goes well. They've got to get it right. They're going to get it right, right?
Safety is the first and foremost concern for these federal agencies. And to put this in context, right now in the United States, there's about 200,000 planes and helicopters in active use. And at any point in time, even during peak hours, there's just over 5,000 aircraft in the air. Well, if we look forward to a world in which there's drone delivery, in which users can summon delivery drones on demand at any time of day or night for, a burrito, beer, coffee, pharmacy, medication, or whatnot, that is going to be an enormous increase in air traffic. And what has NASA and the FAA so concerned is, how are these drones, many of which are going to be flying below 400 feet in what has traditionally been uncontrolled airspace, how will they be sharing that airspace with planes that are operated by humans, while many of these drones will be operated semi-autonomously? And it creates a really confusing mix and a picture in which even the slightest error can cause a chain reaction that could put lives in jeopardy.
So, okay, this is where I'm like, wait a minute, it's going to be run by humans? Although they've done a good job with air traffic control, I guess, right?
on.
So should I feel good about that? Or would an algorithm that can figure it all out and make sure, I don't know, should I trust an algorithm more?
Yeah, so that's the interesting thing is that, in fact, this is going to be sort of an intersection for the time being of human air traffic control and computer algorithmic air traffic control. So traditionally, when we think about the task of an air traffic controller, it's all about being able to pay close attention to that work for long stretches of time, being able to act with stability under pressure. Well, that's one thing to manage that in the context of a few thousand aircraft. But when we're talking about hundreds of thousands, if not millions of these operations per day, that's obviously a greater scale than any number of human air traffic controllers can manage. Enter the algorithms. And yet, although the software and big data is incredibly powerful, there's all sorts of other variables to consider, including connectivity with other devices. How are these devices connecting with each other? How are they connecting with the ground? What happens if the network goes out? What happens if a nefarious actor tries to interfere with the network?
5G interference, or what is it that's supposed to interfere with,
5G.
like planes, right?
Yeah, so there's incredible number of factors that can interfere. Not to mention just the everyday things like bird strikes or strange weather or other unpredictable events. And so it's the sort of thing that algorithms are certainly going to play a huge role, and wireless connectivity is going to play a huge role in making sure that these objects aren't colliding. But we're introducing so many new types of aircraft for so many purposes.
Right.
That there's so many potential unintended consequences.
Okay,
And that's what I think the FAA and NASA are really trying to get ahead of.
Well, that's where I want to end in the last minute that we have with you, are unintended consequences of this technology. We think about, crashes, and those would be terrible. But what about the idea that drones could be invading our personal space and could be worries about civil liberties, or they could be used to traffic drugs or drop weapons in places where there shouldn't be weapons?
Absolutely. I mean, we've already seen this recently, even with that drone that was mysteriously flying over Yankee Stadium the other night, that we need to be able to know, like, where are these aircraft and what are they doing? Where ought they be able to fly?
Right.
When? How low? How loud? What sort of data should they be able to collect, whether it's video or audio? How long should that data be able to be stored? There's innumerable questions that need to be answered. And I think one of the big questions of this story is how fast are regulators willing to move versus how fast are these companies wanting to move?
Chris, 15 seconds. After doing this story, do you feel like, drones are coming, get ready for it, everybody, and we'll do it safely? We can do this real quickly.
I think they will be here sooner than we think. And I think that for all of our sake, I hope that we can do so safely.
Fingers crossed. All right, Chris Feliciano Arnold, contributor of Bloomberg Business Week. This is the cover story of the new issue, out already on newsstands, online, and always on the Bloomberg. We're checking into Snap. Big sell-off in the after hours following no guidance. Looking forward.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, yes, indeed. You are listening and watching Bloomberg Business Week on this Thursday. Big earnings report, Snap down 25%, almost 26% here in the after hours.
Yeah, the company's suspending guidance. We're going to get an update from Mandeep Singh, Bloomberg Intelligence Senior Technology Analyst, in just a few minutes. First, though, Charlie Pellet, I know you're watching this and more in the after hours.
Indeed, Mattel out with adjusted earnings per share for the second quarter that had beat the average analyst estimate. Mattel after hours down by roughly 1.3%. But Snap, the big story, we've got more coming up, but it did report revenue that missed analyst estimates, citing a major slowdown in the ad industry that is likely to affect other tech giants. Right now, we've got shares of Snap Inc. plunging by 25%. By the way, you can add Snap to the list of tech names, saying they will be slowing the rate of hiring and the rate of operating expense growth. An update for the Dow, the S&P and NASDAQ. Indeed, we had buying right into the closing bell today, with the S&P picking up 39 points. S&P notching its best three-day rally since May. The Dow up 162, up 0.5. NASDAQ up 161 points, up by 1.4%. 10-year yield 2.87%. Gold today up 1.4%, $17.19 the ounce. And West Texas Intermediate crude dropped 3.5%, $96.43 for a barrel of WTI. Marcy McGregor is senior investment strategist at the chief investment officer of Merrill Lynch and Bank of America Private Bank. And right here on Bloomberg Business Week, she spoke with us today about the market backdrop.
So I think we're seeing a little bit of relief from the markets that we've seen recently. But in the bigger picture, I think really what the market needs is evidence that inflation has peaked. And ultimately, I think we need to get through this period, which I think is going to be an earnings reset where expectations get reset lower. And that's where I think markets can actually get set in a more meaningfully positive direction for the longer term.
Airbnb co-founder Joe Gebbia is stepping back from a full-time role at the home-sharing company to spend more time with his family and explore new projects. The 40-year-old says his first new venture is a startup called Parenthood, at which he'll be taking on the role of dad. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. We want to get back to a big story here in the aftermarket, and that is Snap shares. They are down a lot, down about 25% in the after hours. The big headline that really kind of freaked out investors, the company not providing third quarter financial guidance.
Revenue also missed analyst estimates. That's citing a major slowdown in the ad industry. It's likely to affect other tech giants, and indeed, right after these numbers came out, we saw selling of Facebook, Meta stock, as well as Pinterest. Let's get into it. Mandeep Singh is senior technology analyst, I should say, for Bloomberg Intelligence. He joins us from Long Island right now. Mandeep, you've had about 20 minutes to look at these results. What sticks out to you as being the big takeaways?
The big takeaway is after their announcement, pre-announcement, I should say, in May, the ad pricing environment seems to have gotten worse. And that is what reflects in the numbers. They guided to flat. In fact, they said quarter to date, it's flat revenue growth, whereas consensus was around mid-teens. So we think it's a function of ad pricing. It's gotten worse because, one, advertisers are pulling back their spend. A lot of that has to do with inflation, but the other big negative factor is Apple's privacy changes, and that seemed to be really hurting the direct response-based ads more and more, where Snapchat and Meta
Power to the people.
But Mandeep, this is not new, right? We've known about these changes, and indeed, not just Snap, but Facebook has come out and said the challenge that it'll pose.
Yeah, but remember, ad pricing is auction-based. Right. So if I am bidding on that auction right now as an advertiser, I'm saying I should bid lower because the ads are less effective. So what Snap and Meta have to do is to redesign their algorithms for ad targeting because they're not getting the signal. And it's feeding on itself because advertisers are saying your ad inventory is worth nothing. Now, you're not able to drive conversions at all. So that ad pricing pressure seems to be cascading, and I just feel like if you are a brand advertiser, right now you are in a better position than, if you were a direct response ad vendor.
So we mentioned Snap was down, Mandeep, about 24% after hours. I'm looking at Alphabet's down 2.25%. Meta is down about 4.9%, so almost 5%. Twitter's down about 1.6%. So the impact, should we assume it hits everybody?
Yes, so you can see Twitter is down 1% because Twitter has the least exposure to direct response ads. In fact, one of the things that investors thought Twitter didn't do a good job was to, pivot to direct response ads over the year, and that is what hurt their valuation. But right now, that's the segment that's getting hit the hardest. And look, inflation in general is bad for overall ad spending. So it's not a surprise that, these companies aren't doing well in times of high inflation. And as long as inflation continues to be high, you will see all the digital ad companies suffer, including Alphabet. But Alphabet probably will be the most resilient because it has the highest ROI on ad spend still. The search ads are still the highest ROI.
Okay, so we're watching Twitter, we're watching Pinterest, we're watching Meta Platforms, the company formerly known as Facebook. What do we need to keep an eye on ahead of their reporting? Because we are expecting to hear from them soon with this current round of earnings. I mean, how ugly could it get for these companies based on what we saw with Snap?
So the good thing is expectations continue to come down, right? So after Snap's pre-announcement, their estimates were cut by 10%. And for pretty much all the ad names, estimates did come down. Now, after today's results, you will see expectations go down more. So estimates will come down further. And there will be a point where estimates will be cut enough that the year-over-year comparison next year will really be a good setup. But we haven't reached that point yet, simply because expectations were high. And also on the cost side, these companies weren't prepared for this kind of a downturn, so they are paring back on hiring because they never thought about this kind of a scenario. So I think a lot has to happen on the cost side as well.
If you had to add it up and what it tells us about the economy, perhaps, just got about 20 seconds left. What does it tell us more broadly, Mandeep?
That we are in for a slowdown, whether we avert a recession or not. No one has a crystal ball, but clearly inflation is hurting the advertising sector, and it's pointing to a slowdown.
You're a gem. I know it's busy for you, so thank you so much for making some sense out of this as we watch these shares of Snap sell off in the after hours. Our Bloomberg Intelligence Senior Technology Analyst, Mandeep Singh, and as we mentioned, shares of Snap, they are still down about 25% in the after hours. Google, Alphabet down 2.4%. Meta is down 4.8%. And Twitter, as he said, maybe with the least exposure, still down about 1.6%.
Yeah, I wonder what the trade looks like tomorrow, Carol. Hard to believe Snap down 25%. It's pretty incredible.
No, it's a good point. We'll take a look at what's going on with NASDAQ futures. Maybe we'll get into that in just a moment. In the meantime, back to World and National News. Back over to Nancy Lyons in D.C.
Thanks, Carol. President Biden has tested positive for COVID-19. The White House says the president is fully vaccinated and twice boosted. He's experiencing very mild symptoms like a runny nose and dry cough. White House coronavirus coordinator Dr. Ashish Jha says the president sounded great when they talked this morning.
Because the president is fully vaccinated, double boosted, his risk of serious illness is dramatically lower. He's also getting treated with a very powerful antiviral, and that further reduces his risk.
Dr. Jha says the president has begun taking Pfizer's antiviral drug, Paxlovid. Two influential progressives in Congress are ramping up a fight with Commerce Secretary Gina Raimondo.
Senator Elizabeth Warren and Congressional Progressive Caucus Chair Pramila Jayapal have sent a letter to Raimondo. They say too many big tech alumni work in her department, and they could be putting corporate profits ahead of consumers, workers, and small businesses. The letter comes on the heels of a recent report on tech ties within the Commerce Department. Secretary Raimondo's Deputy Chief of Staff, Luis Jimenez, was a Google lobbyist for 4 years. Her Deputy White House liaison liaison Kaylin Jenkins worked on Amazon's public policy team. In Washington, I'm Nathan Hager, Bloomberg Radio.
A majority of Americans, 60%, say Congress should pass a law guaranteeing access to legal abortion nationwide. That's according to a new poll from the Associated Press Nork Center for Public Affairs Research. Over half also say they feel at least somewhat sad or angry about the Supreme Court's decision to overturn Roe v. Wade. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. You all know we are in the thick of earnings season, and we got a bunch of results after the closing bell. We just talked about Snap with our own Mandy Singh, Bloomberg Intelligence, selling off big time in the after hours, down about 25%. Some disappointment in terms of the advertising market, and the company, again, as we mentioned earlier, not providing third quarter financial guidance, but really plunging after that advertiser slump crushes quarterly revenue for that company.
All right. I want to talk a little bit about beer.
Okay.
Sam Adams, Boston
down,
Beer
right?
Company. SAM is the ticker. The stock has just been getting beat up lately as a result of people not drinking as much hard seltzer as the company thought they would. Shares now down 8.3% in the after hours, Carol. The company cutting its adjusted earnings per share guidance for the full year. The guidance missing the average analyst estimates. The commentary and context here, the company expects distributors will keep inventory levels for the remainder of the year below 2021 levels in terms of weeks on hand, and they see full year depletions and shipments decrease of between 2% and 8%, a change from the previous estimate of an increase of between 4 and 10%.
That's kind of rough, too. And I'm looking at that fiscal year gross margin, 43 to 45%. It had seen 45 to 48%. Goes back to, again, Gina Martin Adams.
Getting cut.
Yep, right? And there's margin compression, so you're not as profitable as you were. And you do wonder that investors start to rethink the valuation stories.
All right. You're making me think of Marcy McGregor. She joined us a little less than an hour ago, senior investment strategist in the chief investment office at Merrill Lynch and Bank of America Private Bank. She said that, this earnings reset that we're in is going to take some time. She's not expecting it just to last a couple of weeks. She said a few months to get, over this choppiness that we're seeing.
And part of it is we don't really know. Again, I'll go back to we don't have complete clarity on what this economy is like on the other side of all this unprecedented stimulus. And now that we're pulling it out, right, the bathtub, we're letting all the stimulus out, right? No more.
You know what I do
and
know?
what that does in terms of growth and the impact.
What I do know is that I got another season of Industry to watch, which I'm really excited about.
Season 2, we also like it because the Bloomberg's featured pretty highly. Anyway, we're going to talk with the co-creators, the co-writers, and the co-executive producers. They're coming our way in just a moment right here on Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Snapping shares are plunging after hours. It reported disappointing sales roiled by a major slowdown in ad spending and rising competition for dwindling marketing dollars. Shares of Meta Platforms and Alphabet also falling after hours. Snap, by the way, says it is not providing third quarter financial guidance. Right now, we do have Snap shares. They are down after hours by about 25%. Also reporting after the closing bell, Boston Beer. It has cut its adjusted earnings per share guidance for the full year. That guidance did miss the average analyst estimate after hours. Shares of Boston Beer, ticker SAM, as in Sam Adams Beer, down now by just about 8%. Stocks rose amid a rally in mega caps as strength in the corporate sector boosted investor sentiment. Today, the S&P advanced for a third day, up 39 points, up 1%. The Dow up 162, up 0.5%. NASDAQ up 161, up 1.4%. 10-year yield 2.87%. Spot gold up 1.3%. 17.19 the ounce. West Texas Intermediate crude down 3.3%. 96.55 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Mark your calendars, everybody. Monday, August 1st, the second season of Industry making its way to HBO. It's set in a fictional investment bank in London, but it's branching out a little bit. And I got to say, the Bloomberg Terminal featured in a big way.
I'm pretty excited about it. I really enjoyed season 1. Looking forward to season 2, and excited to speak to Mickey Down and Conrad Kay. They're the writers, co-creators, and executive producers of HBO's drama series Industry. They join us this evening on the phone from the UK. Guys, how are you?
We're great. Thanks, guys. Thanks for having us.
Yeah, thanks.
Very well. Thank you for having us.
Yeah, thanks so much for joining us. Hey, Conrad, I want to start with you and just give us an idea of where season 2 picks up here, because it's been quite a bit of time since the 2020 debut.
It is. I mean, we had a pretty natural hiatus from a storytelling point of view, because obviously there was a 2-year gap between the end of the first season and when it's airing season 2. And it actually, I mean, it gave us quite a big creative decision, because obviously the biggest thing that's ever happened to workplaces in the last, 100 years happened. And we had this big issue thinking, God, does anybody who actually want to watch a TV show that features COVID? But what we decided to do was sort of jump the characters forward, start them in a psychologically quite different place to where we saw them at the end of season 1, and make sure that COVID was sort of texturally in the story and quite kind of do it with a light touch, but also, make sure that had a psychological impact on all the characters, but make sure it didn't drive the plot too much, because we didn't think anybody wanted to be plunged back into that kind of, working from home world.
Right. Well, what we love about this is you guys were British bankers. You understand this world, and it's really fun to read kind of blogs on it, because people who are in the industry are like, man, they get it right. Like, you really do get kind of the feel, the culture, if you will. So, Mickey, come on in on this. I feel like every day there's so much fodder for you guys to pull from reality when it comes to what's going on in the financial world. How do you think about the evolution of the series and the topics that you want to cover?
It's really funny, because we had some really good consultants on the first season, and obviously me and Conrad used to work in finance. But we're 10 years out of the game now, so it was really helpful to have some people who were on the ground. And in season 2, we had some really, really good consultants. We had a sort of secret consultant who's a pretty high-profile guy in the industry.
Whose name is? Okay.
Who would not want me to name him. But he was really, really good at giving us some sort of ear to the ground stuff. And it was really odd, because all the things that we came up with in this season, it seemed to have come true. I mean, there were sort of these little things. I mean, there was obviously, there were some very esoteric things we touched in this season. The idea of CRMS, and there's the idea of telehealth, and obviously the response to the COVID pandemic and all that stuff. It feels like it was quite nice to be able to try and predict stuff and see what actually happened. And obviously it's a pretty tumultuous time in financial markets at the moment, which was great for good drama.
Hey, Mickey, I'm wondering how, from a writing perspective, you bring people up to speed on what, not that they missed in season 1, but since so much time has passed between the 2 seasons, how you remind people of what actually happened. Are we going to see some sort of previously on, or how do you handle that as a writer?
Yeah, it's a really good question, and especially since, because of the COVID pandemic, there was basically been 2 years in between the seasons. I think we kind of, the first episode of the second season is a little bit of a balancing act, because you obviously want to throw people into the deep end and not have too much throat clearing and too much reminders of what happened in season 1. But obviously, especially given the time gap between the 2 seasons, you don't want people to be lost either. I think practically there probably will be a sort of season recap, but there are a few little sort of nods to the first season and reminders. But I mean, it's I think it's, I suppose, even if you haven't seen the first season, I think this season sort of stands up, and we throw the characters back in, and then the inciting incident of Harper coming back into work after a year of isolation is a pretty relatable one, and I feel like that's the sort of
All right. I got to ask you, there's a lot of sex, drugs, and rock and roll in the series. And Conrad, come on in, or let's start with you, Conrad. I mean, keep it clean. It's a family audience. But I mean, is that the reality of what you guys saw when it came to the financial world?
Well, look, I mean, the answer we always give to that question is it's obviously slightly sensationalized. When people always say, oh, is this based on your sort of biography or your lived reality of working in these places? We obviously, I mean, it's not a documentary. We're making a TV show, so we obviously sensationalize things and lean into certain things. And me and Mickey, because we're a creative partnership, I think we're kind of a bit braver in some of how bold we are, because we road test stuff with each other. We try and push each other, and we always, for some reason, maybe it's because we're demented, we always land in quite perverse places. But no, I mean, I think look, we love. I mean, just to talk about the sex scenes. I mean, I know you have a family audience, but like, we're very proud of. People are always like, oh, is it gratuitous? Is it objectifying? And like, we actually think in season 2 there's actually more sex, but weirdly it's more character based. We feel like we're telling more story, and it was the kind of the dialogue we were having between the actors, the intimacy coordinators, the producers. It was very much a kind of concerted effort to make those things really feel like they were earning their place in the show. And the one thing I will say, for the people put off by the sex and the drugs in season 1, and obviously you have a more financially skewed audience, me and Mickey are incredibly proud of the finance story that anchors season 2 in a way that we wouldn't. I mean, in a way that we never really dug up into the real weeds of that stuff in season 1. I mean, we feel in season 2 we've actually rendered it even more authentically.
Well, Mickey, come on in and finish up with us, if you could, because I do love that you guys get into hedge funds and the private wealth management division. We talk about it here. I mean, people in our world are getting richer and richer, and they just need more and more advisors in private wealth divisions to manage it all.
Yeah, I mean, it's our depiction of private wealth management is, I'd say, pretty sensationalized. I mean, I actually did an internship in private wealth management. That was my first ever job out of university, and this is a little bit of a piece of revenge against them, I think, for not giving me a job at the end of it.
I like it. Some real honesty there.
There are personal aspects that make their way into it.
So, guys, no banking after this? You're completely done with banking? Does it make you want to get back into it, give it another shot?
Banking's done with us. I think banking made its mind up when they fired Conrad and they pushed me very, very keenly towards the door.
Conrad?
Well, yeah, but it is funny actually writing about it, and me and Mickey have this awful term for it where we're not in finance anymore because we're writing about it. We're kind of finance adjacent, and you realize how you realize just how many incredibly unique and strange and idiosyncratic characters are in that world, and it's. I don't know, we have an incredible, looking back at it with 10 years hindsight, we have an incredible amount of affection for that world and all the people who work in it.
Well, looking forward to seeing these stories lay out, as we said, August 1st, second season of Industry, making its way to HBO. Mickey Down, Conrad Kay, Reuters co-creators, executive producers of Industry, joining us on the phone from UK.
I can't wait. I love the show.
You know what people don't love? Shares a Snap, down 26% in the after hours. All right, have a good evening, everybody. We'll see you tomorrow.